Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, prospects are turning a bit grim, with investors in retreat after the US Fed disappointed the doves. On Wall Street, markets are in no mood for risk, with the S&P now down a further 1.5% in early afternoon trading today, and benchmark bond yields are falling. This follows a 1.5% to 2% losses in most of the European markets overnight. Yesterday, Shanghai was down 0.5% and Hong Kong closed a full 1% lower. Tokyo was down an eye-popping 2.8%, while the Australians fell 1.3%. The New Zealand market, small rise, was certainly an outlier. There have been a whole bunch of central banks reviewing official interest rates overnight. The Japanese kept theirs unchanged following the Indonesians and the Philippines. Thailand raised theirs by 25 basis points, and the British decided on no change. Almost all of them pared back their growth forecast for 2019, except Japan. Sweden also raised its rates, but what makes this special is that it raised them from a negative 0.5% to a negative 0.25%. And Mexico is expected to raise its rate by 25 basis points to 8% this morning. In China, there are growing signs of credit stress, especially in the corporate world and especially amongst property developers. And the official crackdown on capital flows is limiting the ability of their corporates to do large deals. And back in the US, the possibility of a federal government shutdown has suddenly returned. The losing and departing Republicans seem to want to leave a poison pill there. In the EU, Deutsche Bank, Crédit Agricole and Credit Suisse and another bank have all been charged by competition regulators there for being in a bond trading cartel. And here is some good news, a ray of sunshine. Ratings agency Fitch is raising its growth forecast for New Zealand in 2018 and 2019, the opposite tack to the one ANZ took yesterday. US Treasury 10-year yield is now at 2.77% in a major sell-off after the Fed announcement yesterday. Their 210 curve dropped even more, down 8 basis points to just on 10 basis points. Local swap rates have followed and have fallen dramatically, with the 2-year down 7 basis points, and that makes 10 basis points since the start of the week. The 10-year is down 12 basis points over the same time. Gold is higher again, is now at $1,261 an ounce, an $8 rise today. That makes it a 3.5% rise since the beginning of the month, which is a lot for gold. US oil prices, however, have resumed their sharp falls today, down about $2 to now on $46 a barrel. The Brent benchmark is now just under $55 a barrel. Not only is there too much supply, there are growing worries that demand will slide. And the Kiwi dollar is a lot lower today after the Fed hike, down more than 0.5 cent to 67.7 US cents. Our weak GDP data, you say, didn't help either. On the cross rates, we're at 95.2 Aussie cents and 59.1 Euro cents. That puts the TWI at 72.2. And Bitcoin has had another large gain overnight, rising more than $250 or 7% to $4,078. And this has been the final review for 2018. Thank you for joining us over the past year. We'll be back again in 2019. Everyone here at interest.co.nz wishes you a relaxing holiday season. Hope the weather is good wherever you are. We will have a daily holiday bulletin each business day until January 21, so I hope you can keep an eye on the rest of what the world is up to that might affect our economy here. I'm David Chaston. Thanks for joining us in 2018 and all the best for the new year.